Hi, this is David Mandy. I want to welcome everyone today to the Talisker Resources Town Hall webinar. It's a real pleasure to have you here this afternoon. Talisker, just for your background information, Talisker Resources trades under the symbol TSK on the TSX Venture, and for the US investors, they have an OTCQX listing under the symbol TSKF. For those of you new to these broadcasts, I'll just give you a quick introduction. About 6 years ago, O&M kind of recognized the sea change in non-deal investor marketing. The commissions had gone away on Wall Street. The information seemed to not trickle down like it once did. And investors were really managing their own money now. They were kind of gone away from using retail brokers. So we had to go direct to the investor, the self-directed investor. The information now is widely available to a whole new generation of self-directed investors, and they can't be found in key financial centers. These investors are receiving information at home. Used to be geared and available only to professional investors in conference rooms. So we have a much broader audience, in essence. The questions from Q&A are for everyone. The hope is that this broadcast will answer questions you didn't know you had to ask. Questions can be easily answered by going to the question portal of GoToWebinar, or you can also email us. Be assured that questions that remain unanswered will follow up in a timely manner after the call. For those who dialed in with your phone, unfortunately, the only way you can hear our pre-recorded introductory presentation is on your computer speakers. That's not possible. You'll be able to hear the main presentation from management after about 4 minutes, so that won't be too long. So I thank you for your patience, and please stay tuned. Before we turn to our host, I'd like to introduce our introductory speaker today, Paul Harris, who's the Latin American editor for the Mining Journal. Paul is a mining sector researcher, analyst. He's a reporter. He's been at it for over 16 years in the mining sector. 13 of the years were in Latin America experience. In addition to providing analysis and research and reporting about the sector since 2015, again, he's also been the editor of the Mining Journal for the Latin American region. Paul really understands the mining industry, and this is for the macro side of the presentation. Just to give you a sense, you generalists out there, just to give a sense of exactly what's going on in the industry right now and why it's very important that you pay attention. So on that note, I'm going to turn the call over to Paul.
The final quarter of 2020 has not been as spectacular as the two preceding quarters for gold. After peaking at over $2,000 per ounce in July, the gold price has pulled back to about $1,850 per ounce at the current time. And the benchmark GDX ETF has fallen 25% since early August. Throughout much of this year, the gold price was driven by the unprecedented situation and uncertainty caused by the COVID-19 pandemic, the economic disruption it caused, and the financial stimulus that many governments around the world provided to shore up their economies, a process that continues. As the year draws to an end, the outlook has changed considerably because although much of the Western world, in the Northern Hemisphere particularly, experiences a second and even third wave of the COVID-19 pandemic and soaring numbers of cases, the possibility of a viable vaccine have been drawing closer day by day and have also been started to roll out in specific countries. If the COVID-19 vaccines are successful in halting the pandemic, with the prospect of life becoming more normal as 2021 progresses, there is likely to be more downward pressure on the gold price as investor confidence returns and interest migrates to other sectors of the market. Once the COVID-19 pandemic starts to subside, we are likely to see incredible economic activity, which will put pressure on gold, but will be good for other commodities such as copper. The recent surge in the copper price to $3.50 a pound is a sign of this growing confidence, and other industrial commodities such as iron ore are also closing the year strongly, with the promise of more to come as the economic rebound signifies a rebound in economic activity. Let me do that bit again. The recent surge in the copper price to $3.50 a pound is a sign of this growing confidence, and other industrial commodities such as iron ore are also closing the year strongly. A rebound in the economy means a rebound in economic activity, infrastructure construction, and similar things which will demand a lot of mineral commodities. The positivity of economic re-emergence is likely to figure more strongly than the debt burdens governments around the world face as a result of their stimulus packages, although liquidity, debt, and negligible interest rates will continue to be a good recipe for gold. 2020 has been a good year for gold exploration companies who have found the equity markets open for much of the year and in a way that has not been seen for many, many years. Investors have tasked explorers with being more aggressive in drilling their projects to rapidly advance them to resource definition and onto economic studies, and by and large, the explorers have responded. However, investment has generally preferred safe and well-known jurisdictions, such as British Columbia in Canada, where there is a familiar and well-trodden permitting process, access to skilled labour and technical services, and infrastructure, such as roads and power lines, already in situ. The exploration results out of British Columbia this year have been considerable as the rate of activity has increased, which will help ensure that it remains a centre for new mine development. Locations in the southern part of the province also benefit from weather that allows for year-round operations, which means no winter breaks to drilling and other activities. Gold miners want to build and operate gold mines in British Columbia, and consequently, the province has seen several M&A transactions over the past few months, despite the travel restrictions related to COVID-19. Gold mines can be built in British Columbia, with a recent example being the Brucejack mine, and more mines will certainly follow. Thank you very much.
Thank you, Paul. Paul Harris. Again, he's the Mining Journal Latin American editor. Now we're going to turn to our host, Terry Harbort. Terry is the Chief Executive Officer, Director, and President of Talisker Resource. He also is the former Chief Geoscientist of Barkerfield Gold Mines, which many of our investors know of. Terry has a PhD in structural geology and tectonics, and he's recognized. He was on the senior discovery team of Anglo Gold Ashanti. He's a specialist in mapping, interpretation of ore geometries, and direct relations to mineral and economics. So he's the best in the business. I mean, what he does, and it's the beginning of everything. You've got to find this ore before you can get it out of the ground. So on that note, I'm going to turn the call over to Terry.
Hello, everybody, and welcome. Thanks very much for logging into the webinar. I hope everybody and their families are safe and well with the COVID pandemic. Real pleasure to present Talisker Resources to you, and also our vision to become a tier 1 discoverer, a plus 5 million ounce discoverer within the next 3 to 4 years. I note that in our attendee list, I do have some people who've heard the presentation before and some actually existing shareholders. You're welcome to stay on the line. It might be a bit of a recover. Some of you will know the story very well. For the rest of you, I'll go through in detail the history of the company and the main assets that we have. And everybody's welcome at the end to propose any questions or clarifications, particularly on what we're going to be moving towards in 2021 and moving towards reaching our maiden resource statement in Q1 or Q2 in early 2022.
Terry, this is David Mandy. I just want to encourage people that do know the story and have heard it before to please stay on. The Q&A will be where they'll be able to ask their questions and hear others' questions, and I think they'll find that very educational, even though they know the story. So anyway, over to you, Terry.
Absolutely, and more than welcome to tell the story again. A little bit of the history of Talisker Resources, a very new company. We've only been listed for about 18 months, initially on the CSE and on the QB in the US. We've upgraded of both of those boards last year to the TSX main board and upgraded to the QX in the US. You'll note that we've got a very strong shareholder base, a large percentage of institutional shareholders, some very strong names in there: Franklin Templeton, RBC, some of the Sprott funds, Gold 2000 from Switzerland, Equinox out of New York, Merck, Donald Smith & Co, and a whole series of other institutional shareholders. So we'll have a bit of a talk about why we've got such strong institutional shareholder base in a very early stage in the development of the company. Some of that, of course, has to do with the strong insider shareholding base. We've got just under 10% insider shareholding. Myself, I've put quite a bit of my personal money into the company, just under $1 million. I own about 5 million shares. So we're very supportive both in board and management of the vision that we have for the company. We've also built the company quite quickly throughout that time, taking it from a $10 million company early on to where we're sitting now, in around about $75, $76 million. We've also got a large treasury base at the moment. We're a very aggressive company. We're planning to do a lot of drilling over the next couple of years. So that's why we've got such a large treasury base, and it's the strong institutional and corporate support that we've had in our capital raising that's been able to build this ability to raise this large amount of capital. The predominant reason why there's such strong institutional support and why in such a new and young company we've been able to raise a significant amount of funds and do a lot of asset acquisition has to do with the Talisker Resources management team. Our management team's been together as a single long-lived group for one of the longest times of any exploration team currently active in the gold space. Around about 20 years we've been together. All of us are big company trained, out of the likes of BHP, Anglo American, Anglo Gold Ashanti. We're all very serious scientists, all PhD and master's level. So we take our exploration and our exploration methodology very seriously. We've been quite fortunate throughout that time to also be one of the most successful exploration teams currently active, with now over 47 million ounces accredited to our team. The lion's share of that discovery was when we were the Americas exploration team for Anglo Gold Ashanti under Mark Cutifani. The discoveries throughout that time consisted of La Colosa, 28 million ounces, Gramalote, that B2 Gold are now putting into production, 6.2 million ounces. The expansion on the Cuiabá deposit in Brazil, a further 9 million ounces. We all left Anglo Gold Ashanti as a coherent team in 2010 and became the arm's length technical team for the then Osisko Mining. Osisko at the time were concerned about the possibility of a hostile takeover for Canadian Malarctic, which was then and still is Canada's largest gold mine. We were brought in to develop a global exploration strategy to be able to grow Osisko organically. Unfortunately, their fears were well founded. The rest is history, as we all know. Goldcorp making a hostile bid, that hostile bid being beaten off by a white knight partnership between Yamana, Agnico Eagle. Osisko was able to roll out, or the Osisko management team, a 5% royalty and form Osisko Gold Royalties, which is now almost a $3 billion company. Our consulting agreement was taken out with them, and we became again the technical team for the new Osisko Royalties and the Osisko Group, advising on all their royalty streaming and equity transactions. And throughout that time period, Osisko would then place us either on the board as senior management or as technical team leads for their investee companies. We're also very fortunate there to add to our discovery record, adding another 5 million ounces as the technical advisory team behind the Windfall deposit with the newer Cisco mining. And then now I think it's about 6.3 million that's been added at the Caribou deposit, formerly owned by Barkerville Gold Mines, where I was chief geoscientist. That's now gone into the Cisco Development Corp. So in summary, what all this comes down to is there's a lot of institutional support because we're a very strong and experienced technical team with a track record that's proven by discovery ounces time and time again on the books. Proven ability to be able to identify brand new greenfields areas, build exploration teams and execute in those areas to put millions of ounces on the books, but also look at old camps that have been explored for some of them in excess of 100 years, and be able to crack the code on the mineralization and to be add millions of ounces more in a relatively short time period. Just a quick discussion on where we're focused. We're very focused regionally in south central British Columbia. There are a number of reasons for this. The first is obviously the prospectivity and the immaturity of exploration in this region. We believe that the region's been poorly explored in the last 20, 30, 40 years using modern techniques. So we see a great deal of upside. We also really like the access here. You'll see there's 3 main highways coming in from Vancouver, the capital city of British Columbia. So we've got excellent access, including Highway 1 right through the middle of our land packages. We've also got very good infrastructure, a lot of towns, very easy access. We don't have to build camps up in these areas. Our geologists can stay in the towns. We don't have to fly our geologists into the field. We've also got an extended field season. We've got a 10 or 11-month field season, depending on the winter and on the snowfall. We're at a low latitude, semi-desert, semi-arid environment in a lot of our areas. So the snowfall doesn't last very long. So what all this equates to is that when you compare us to companies that are operational in northern BC, up in the Golden Triangle, areas such as the Abitibi or James Bay, the Yukon, we can conduct our work a lot cheaper and a lot faster. And what those companies may be able to achieve in 9 or 10 years, we can effectively achieve in 2 or 3 years at a greatly reduced cost. That's one of the reasons why we're really focused here. You'll see the large land package that's right in the center there, the Spences Bridge Gold Project. That was one of the projects that we founded the company on. We were fortunate to be working as consultants for Westhaven Ventures, now Westhaven Gold Corp at the time. Many of you may know of all be shareholders in Westhaven and be following their shovel nose discovery close to Merritt. We were able to identify very early on when this Spences Bridge Gold Belt was still in a frontier sense, so it hadn't moved into emerging, it had no discoveries at that time, that Westhaven were very close to making a significant discovery, a discovery which would take this entire belt into becoming one of Canada's very first low sulfidation epithermal gold vein belts. We approached Westhaven at the time to see if they would be interested in some sort of joint venture structure to be able to stake and explore this entire belt. Because we all know what happens when a company makes a new discovery in a new belt. 100 companies rush in, and it's very difficult to do systematic methodological exploration because it's too hard to control the ground and consolidate. At the time, Westhaven wanted to remain focused on shovel nose. They didn't have the funding or the technical expertise to conduct a large-scale greenfields program, which is really what our forte is from working with major companies. So we're able to negotiate to be able to stake this entire belt just before they release their discovery release. And in 8 hours, in the single largest land staking in British Columbian history, we were able to take control of 85% of the Spences Bridge Gold Belt just prior to their discovery release. We went on further with our Greenfields in our first year as a company, 2019, and were able to reinterpret the geology of the region and identify another 2 previously unrecognized Cretaceous gold belts, the Lower and Remington belts, and control those belts 100% simply by free staking. We were very aggressive in our first 2 years in the field. Over 20 geologists in the field conducting major company style regional stream sediment and geochemical programs. In those 2 years, we've developed over 100 anomalies. A large suite of those larger than the shovel nose discovery anomaly. We've so far taken 8 of those anomalies up to drill phase. We're currently permitting 4 of those right now, and we plan to drill 4 of those this year with the hopes to make our first or several Greenfields grassroots discoveries this year, within 3 years of forming the company. Unfortunately, that's just about all I'll have time to talk about on our Greenfields. Because what I want to talk about today and really focus on is Bralorne, which is our flagship drill project, as you can see there in the northwest. The Bralorne camp's a historic gold camp. There was 3 historic mines that were in production for almost 50 years, one of them for over 50 years. There was a total of 4.2 million ounces produced from just 30 veins at an average recovered grade of 17.7 grams. This camp was the highest grade, longest producing gold camp in British Columbia, and a top tier in gold grade percentile in the world, nearly 18 grams per tonne average grade. To put that into perspective for you, for every 50-metre vertical panel that they were able to mine historically, they produced on average 115,000 ounces. So it's 2,300 ounces per vertical metre. So a very rich mine. Mining halted in the late 60s in 2 of the mines. They'd only mined to a maximum depth of about 900 metres. They continued on one mine to the early 70s. The gold price at the time, $35 an ounce. That equates to about 220 in current dollar value. To make it worse at the time, they were under the gold standard. The Canadian dollar and the US dollar were at parity. So they're actually mining at 220 Canadian an ounce. Well, now we're orders of magnitude above that in the economics. We're above 2,500 in current dollar value. So there's been a quantum change in the economics of what they were historically mining at. Very interestingly, they continued at depth on one vein, this 77 vein, down to a total depth of 1.9 kilometres, just one vein. For a long length of time, until it was surpassed by Glencore's Kidd Creek in the Abitibi. This was actually the deepest mine in Canada, based on mining of that one vein, down to nearly 2 kilometres. So it was these collection of things that really got us interested in the project. Firstly, that 29 of the veins weren't mined below 900 metres depth. They'd stopped them above that. One of the veins was mined very deep continuously, showing incredible structural continuity, nearly 2 kilometres down dip of continuous continuity. Thirdly, that there was incredible continuity in the production of these veins. And then finally, that we've gone through an order of magnitude change in the economics of the gold price compared to what they were mining under the gold standard. Always with high-grade narrow veins, we have concerns about continuity. We've gone through such projects such as Rubicon, where continuity in both grade and structure is of a great concern. Well, we know here that the structural continuity is quite incredible. We can see several kilometres at depth, several kilometres along strike of structural continuity. But what we were then able to discover is that there's also incredible grade continuity. What we're looking at here is historic cross sections through the veins that they've mined. Each of the dots that we can see is a 3-foot drift assay. So this is where they assayed across the back of the veins and took assay samples, analysed them. The big purple dots that we can see are all greater than 15 grams per tonne. So what we can see on the left, the 77 vein, the one vein that they mined very deep, 1,300 metres by 500 metres of greater than 15 gram continuity, level after level, sample after sample. Leonardo de Souza, who's our Vice President of Resource Development, who ran the Cuiabá mine for Anglo-Gold Ashanti for 10 years, said that he'd never seen this sort of continuity in an orogenic system before. So we really started to stand up and take notice, and we looked at all of the other 29 veins that they mined and saw the same characteristics. 500 metres by 500 metres, 750 by 850, 1100 by 600, 600 by 500 metres of high-grade continuity. Most of these veins open along strike, and all of them still open at depth. So our initial thesis, our initial plan was simply to go underneath the historic veins and drill out an increase in what had been already mined. We saw 3 to 4 million ounces simply by going and filling the kilometre underneath the veins that we knew they were continuous for that had never been mined. But then we started looking for low-hanging fruit. We started looking for areas where that actually left the vein and the gold still in the ground, most likely because it wasn't economic at the then gold price of $35 an ounce under the gold standard. So what we're looking at here in this slide is a long section through the 3 historic mines. A to B is about 3.5 kilometres. Down in the bottom right-hand corner, you can see a plan view through the historic veins with the historic mines. The grey that you can see are mined out stopes. So that's what's been taken out. That's what's already gone. Horizontal lines are drifts, vertical lines are shafts. So what we can see is that there's a large area here where they drifted and intersected the historic veins, but never mined them. All of this still sitting back in the ground. So what we've been able to do in a very short time frame and in a very accurate way is use these historic drift assays, use the historic level plans that were mapping of the vein, and be able to build wireframes of these historic veins that we can build a potential exploration model for. So that's what we can see here on the right-hand side of this next page. That we've been able to model wireframes, use a minimum width of these veins, and be able to come up with a very accurate, a very well-constrained model of what we see the initial potential is at this project. Obviously, we haven't extrapolated beyond where we've got known data. We don't go any more than 100 metres down plunge or more than 50 metres along strike. So that's why we see these sharp lines here. These sharp areas over here, these probably join up. Over here, these probably go up to surface over here. But what we've been able to do is constrain this very well. And what we see is very well constrained potential for a minimum of 1.5 to 2 million ounces at about 9.5 grams per tonne potential inferred within this belt. And this is independent of what we see down here at depth. We still really like the project for the possibility to add 3 to 4 million ounces, so equivalent to what's been mined, simply by following these veins down at depth. Before we go on to the next slide, I just want to draw your attention to this graph on the bottom left-hand corner. So this graph is a depth versus grade graph. And what we see here is that there's an apparent trend based on 45,000 drift assays for the grade of the deposit to increase the deeper we go from surface. So that's a very very encouraging trend that we see, and we've seen that with our validation drilling, that the deeper we go, the average grade increases. Up to surface, we see it about 9.5 grams per tonne, and we see that increasing to about 11.5 grams the deeper we go in the deposit. So that's a very good indication for the mineability and economics of this project at depth. All right, everyone's concerned about narrow veins. We're concerned about dilution when we come to mine these projects. We're concerned that high grade will be reduced into lower grade as we build in mining units and we build in blocks and stopes. Well, one of the first things we were very fortunate to discover here in our very first 2 drill holes is that the wall rock is mineralized. Something that had never been identified before, because historically, for the 50 years of production and past the 50 years of production, nobody had ever sampled the wall rock. It had always been selective sampling. So what we've been able to identify is that there's halos or envelopes around each of the veins of up to 2.5 meters in both footwall and hanging wall positions. So up to 5 meters of up to 2.5 grams per tonne in the wall rock. So this has 2 great benefits for us. Firstly, it greatly reduces our dilution when we put mining constraints on the veins, but it also opens up significant potential for large-scale bulk tonnage mining, both close to surface and underground using larger stopes. Having a look again at the mining widths and looking at comparables around the world. Some of the best known comparables here, the Curragh deposit was a very topical one owned by Dalridian Resources, which is now owned by Orion Mine Finance. Serra Grande, which is one of Anglo Gold's deposits there in Brazil. Both of these very similar mining widths, very similar vein widths that we see. Our average vein width we see is just under 1 metre, 90 centimetres. Our close to surface veins, we see that a little bit larger. We see it about 1 metre as the average grade. So we see Bralorne fits in very well with the average vein widths and projected stope widths of a lot of very successful historic mines around the world. So we've been able to establish quite quickly that Bralorne has incredible structural continuity of its veins, proven continuity of several kilometres of individual veins, both down dip and long strike. Within those continuous veins, we've also been able to establish that there's world-class continuity of the grade, level after level, sample after sample, proven by the historic drift assays. We've been able to see that that grade is in the top tier percentile historically going forward. And we've also been able to show very clearly that we've got plus 5 million ounce potential in this project. The first 1.5 to 2 million of that is very well constrained by historic drift assays and historic level plans. So the risk is very low to be able to drill out these resources. But what really makes this project stand out by a lot of other projects at this stage is the infrastructure. Direct highway access in from Vancouver. No need to build a road across the glacier. There's a highway, Highway 40 to the front gate of the project. 20 minutes to the nearest airstrip. It's already got an active mines permit. So it's permitted. It's got an active tailing storage facility that's permitted for both wet and dry stack. Fully operational water discharge permit, 35 litres a second, in place right now, signed off by the government. Fortunately, we've got no acid mine drainage. We've got an alkaline host rock lot of calcium in their plagioclasers, and this neutralizes any sulfide leaching that could occur. So it means that dry stack tailings is a very real possibility here. Doesn't matter if it doesn't, because we've got very good and very large water discharge permits, and the water discharge permits post Mount Polly are one of the most difficult to acquire in British Columbia. So very fortunate here to have these water discharge permits. It's already connected to grid power, a 1500 kVA line directly to the site, fully operational. It wouldn't really matter if it didn't, or if that line needs to be upgraded, because there are 2 hydro generation plants, one 4 kilometres, one 6 kilometres from the site. We've got a state-of-the-art water treatment facility, a column filtration system that cleans the water and discharges through our permit direct into environment. This is fully operational right now. Operational camp and kitchen, we're currently underway to expand that to accommodate 100 people to be able to go into a large-scale resource drill out. We've got a large land package. We worked very hard right at the beginning since we acquired this asset, which we only acquired a year ago, to be able to control the entire district. 12,000 hectares. There's over 40 vein and mineral occurrences, many of which in the last 50 or 60 years have never had any modern exploration or drilling below them. So a lot of regional upside in the Bralorne camp. Very importantly here, a proven process flow for when feasibility time comes. There's 50 years of process data. 65% came out of the gravity circuit. A lot of free gold in this system, 35% out of a float concentrate. The average production throughout life of these 3 mines was 90%. Obviously, we believe with modern technology, this is all based on technology that was 60 and 70 years old, we believe that we can get these average recoveries up to the mid-90s. So very important to have that proven process flow well defined. Finally, and very importantly, we've already signed key Indigenous and community agreements. The most important of these is with the Hoiston people, the traditional owners of the region. This gives us guaranteed support right up to bankable feasibility of the project. So very key agreements to have signed, and we're very proud that we've been able to sign these agreements within the first year of owning this asset. Have a look at now at what some of these veins look like. So we can see there large panels of vein material. This is very similar, for those of you who come from the US, to a mother lode style of deposit. Long linear veins that are very depth extensive. So we can target and drill these veins very well as we go down. We see accepted variability in the grade that we see. We see extremes up to almost a kilo of gold, and then we see lower level ones of 3 grams, and the average we see is coming out at about 9.5 grams. So very much what we expected. The thickness of these veins as well is actually a little bit better than what we expected. We expected continuation of historic widths around about 90 centimeters. Close to surface where we're currently drilling, we're seeing this has increased to about 1 meter of average width. So no surprises so far. Our drilling, and we've completed about 23, just over 22,000 meters actually of drilling last year in our first year. We've been able to validate 25 of these targets. So you remember historically they only mined 30 veins. So we've already got 25 of these veins validated in the first year. Plan view looking along here, so you can see very good strike extent of these veins. So very good mineability because they're very continuous stopes as they go forward. Another cross section here, you'll see these are in an echelon sets. So parallel veins. So again, very good for mineability because you just drift perpendicular and you can drift along the veins, long hole stoping, and be able to develop multiple fronts to mine underground. And that's most likely why, just aside from grade, why this project was so successful for so many years. So what's our plan that we're currently doing? Well, we've just finished about 23,000 meters in our first year. This was validation drilling. This was to validate our potential, the 1.5 to 2 million ounces of potential that we could clearly see using our historic wireframes. So now we're going straight into our resource drill out. Our stage 1 is 50,000 meters of drilling. Drilling off resource between 50 meters and 700 meters from surface, so all relatively close to surface. We initially had a view that we would go underground and drill this, and we started a dewatering program to get underground and drill, but then we compared the costs of drilling this close to surface vein deposits, all from surface versus from underground without development, and then underground with some development. It was by far and away cheaper at this stage to drill from surface. So we've made the decision to suspend our dewatering, at least until the end of this year, when we've got this first resource statement completed. We've currently got 4 rigs active at site. We're currently underway to improve our infrastructure, mainly our accommodation, so we can accommodate 8 rigs at the site. We're looking at probably May to June to be able to have this increase in the number of rigs. We've validated 25 targets, but we're also working very hard to create new targets. We've intercepted about 100 veins that we believe sit in the width that could become new targets. So we've got a large team of geologists who are modeling these veins. We're also bringing in a lot of historic satellite data. There are numerous satellite mines that sit outside of the main camp that we believe we can add rapid ounces to. The first one of these, the Congress project, we plan to start drill testing in May with an additional 2 drill rigs. So we've got a lot of upside that we're looking here. We're focused on the immediate camp, but also identifying at least 1 satellite deposit that we can drill to additional resource base. We're also, while we bring in several others, the Pioneer Extension, the BRX, the Royale, several other areas where we've still got to bring in historic data and model that historic data to understand the potential and then design drilling. So a great deal of upside here, a lot more than we initially thought. So that's basically where we're at with brownfields, where we're at with Bralorne, systematic drill program, converting our potential models that are very well constrained from historic drift assays and historic level plans, and converting those into inferred resource this year. We'll continue with a large-scale drill out this year. We plan by the end of 2021 to have completed our resource drill out and then start to prepare our maiden resource statement and have that completed by the end of Q1 or early Q2 in 2022. So about 1.5 to 2 million ounces on the books within 3 years of forming the company. So a very aggressive approach. But we'll still be continuing with our greenfields. We'll still have a large team. We're looking at drilling 4 of these projects this year. The first of these in Q1, the Golden Hornet project, which you can see down in the bottom right-hand side. This is a polymetallic gold system, similar in a way to Bralorne. We're looking initially at drilling out close to surface bulk tonnage, potentially open pit targets there. We're planning to put in about 7,000 meters of drilling in Golden Hornet. We'll then also continue with the advancement of our early stage projects in the background while we drill our other 3 projects. Dora, down here in the middle, Cyclone and Nova. We're very excited about Cyclone and Nova. These are classical low sulfidation epithermal systems, brand new discoveries. Never a sample taken before. Nobody ever been there to sample them. Discoveries directly from our grassroots exploration, from our stream sediment samples in 2019. Very strong vein systems, sheeted veins, epithermal veins, high level, so chalcedonic or opaline level. So we don't expect to see any gold in the veins, but what we see is significant background gold in the wall rocks. We see sheeted veins up to 300 meters wide in the vein array and 400 meters along strike that we can easily trace these on the ground. These two projects are about 5 kilometers apart. We haven't yet done the work in between these two. We know they strike towards one another. We're hopeful that this can actually form a world-class vein field, that these two projects, Cyclone and Nova, can actually join up. We're planning geophysics and soils and more mapping in between these areas, but based on what we've currently seen, based on the geological characteristics that we see in both of these projects, we're taking them straight to drill phase, straight to permitting, and we plan to drill these in the second half of 2021.
Terry, very
Yes.
important to get to phase 2. I think we should probably sum up so we can make sure we get to Q&A. It's a great presentation, very thorough, very important to get to phase 2, but I think we should sum up so we can get some of people's questions before we lose them. You're actually
Great.
right.
Perfect timing. I have summed up.
Yeah, you're already there. You got it. Good job, Terry. Great presentation. Do you mind if I cut the questions now?
100%. Go for it.
Terrific. We're going to start with Dr. Wood.
Hello, James.
Yeah, hi. Another great presentation. You answered all my questions except one, and that's when do you actually start drilling? You do say that you're going to do 50,000 meters in 2000 or this year in phase 1, but when does phase 1 actually start?
To be honest with you, James, we actually sneakily started it in December last year. And then we shut down for Christmas. So we've already started it. The rigs are on site right now. And the drillers are just coming back and setting up to start. So I'd say tomorrow the 4 rigs will be turning.
Now, when you do get your core, are you going to send some initial drill core to the lab, or are you going to collect, say, 10 holes and do it all at one time, or are you going to put out any initial discovery type announcements?
At Bralorne or at our Greenfields?
At Bralorne. Bralorne's what you're doing first, is that correct?
Yeah, so you know, I guess at Bralorne we've already got about 8,000 samples at the lab, and there's been a lot of delays last year with COVID and the lab being overwhelmed. So we've actually got a whole series of intercepts at the lab right now that we're putting on rush. So those samples from last year will be coming out within the next month or two.
Oh, okay.
And then we'll be having all our new drilling, which will be basically resource drill out is what we're conducting this year. So pretty well, you know, we'll have results coming out all years. We're looking at alternatives to the current lab. We're currently using ALS. ALS, I guess, is being used by a lot of big drill out projects, being used by Caribou, being used by Benchmark, being used by Skeena. So we're actually looking at being able to divide up so we can get a more timely response from our drill assays. It's been abysmal. It's been up to 12 weeks for our non-rush samples and up to 6 weeks for our rush samples. So it's been terrible. But yes, we do have that large backlog at the lab. we've got no backlog at our site. All our core's been cut and shipped to the lab. We've got no backlog. It's all at the lab.
Now the drill core that's at the lab, how many meters per hole were those holes drilled?
In general, we assay around about 70% of the hole. We rush some samples that are specifically in vein, so that'll be high grade. But because we're also currently conducting a study looking at bulk tonnage potential. So to give all the listeners a bit of a concept of what we're thinking about. So a very good example of this is what went on with Canadian Malarctic. Canadian Malarctic was historically mined by Barrick, high-grade veins, and then Cisco came back and looked at material outside of the veins, and we're able to develop a large-scale bulk tonnage deposit. So we're doing enough sampling so we can evaluate that possibility. Because if there is some bulk tonnage, we're focused on the veins and we know the veins are going to work, but we want to at least do this study to look at, is there potential for very large scale bulk tonnage as well as the high grade veins. So that's why we're doing so much sampling. We're not just selectively sampling the veins.
But these aren't like rock samples. These are actual drill holes that have been sent to the lab. Yes,
they're drill core.
Drill core. Okay, that's all my questions. I'm just waiting for the results, as it's very exciting. Thank you, Terry.
Thanks for being on the call. We'll turn to David Kellerman. David, questions today? Good to have you on the call. We'll unmute you, David.
You're muted, I think, David. Let me see if I can unmute you.
Yeah,
actually, David will have to unmute himself.
He's unmuted. David, you can hear us? Okay, we'll come back to you, David. Let's turn to Claude Biget. Claude, questions today? A little problem with muting, but patience.
Yeah, I was muted. What is in store in terms of marketing? Because your share price doesn't reflect, what you have, which is okay at the beginning of a bull market. But do you have something? What's your plan in terms of marketing going forward? Are you going to wait until you have a lot of more drilling, or what's your plan? And then if I get it right, your first resource would be in Q1 or Q2 2021, and you're aiming at 1.5 to 2 million ounces, right?
Yes. So I'll answer both of those questions. The main thing I think that's impacted our share price up to date, we've kicked on after New Year. We're trading at about 37, 38 today. I think people have been waiting for, firstly, our results, but also to see our drill plan, to see what is it we're going to do next. So we'll have a significant marketing coming out pretty well from next week onwards as we communicate this large-scale resource drill out to the market. This is just our first stage, so we'll probably look at increasing. We're very scientific, Claude, as you know, how we like to operate. We don't like to get ahead of ourselves. We don't like to promise things that we can't deliver. So we're delivering this in increments, and the first step really is to put this 50,000 meters in, get an initial base on, and then we're just going to look to increase this and increase this. Our first resource statement, that's correct. We're planning for Q1, Q2 2022. We've actually started working on the document now. So we've engaged an independent QP group who will write that. We've developed a responsibility matrix. We're getting them to validate our modeling methodology right now, and also validate what our spacing is to achieve that inferred drill spacing, and also some areas of indicated that we'll also achieve coming into that zone. Our current plan is, and again, it's something I'm conservative about, because you know, I think we want to hit or exceed what we want to do, and that's in that 1.5 to 2 million ounce realm. Yep.
Thank you, Claude.
Great, thanks.
Thanks for the questions, Claude. We'll check in with David Kellerman. David, can we hear you now? Can you hear us? David?
Did it come? Am I online?
Hear you now, David. Great. Thanks for coming through.
All right. Could you discuss the NSR and the option with West Haven as far as a commercial viability on that type of plan of action?
Sure, 100%. So as part of the negotiation for us to be able to stake right up to their boundaries, initially there was a 10-kilometre exclusion zone. At the time, we said to the West Haven guys, look, we want to go right to the boundary. We don't want anyone else slipping in there. So they were allocated a 2.5% royalty for anything that we found within 5 kilometres from their boundary. So we were able to stake right up to it, and anything within that, they can achieve a 2.5% royalty and a first right of refusal on anything that we discover right next to them, that they get a ROFR on being able to purchase that. Unfortunately for West Haven, up to date, everything that we've found sits outside of that 5K buffer zone. So, you know, that's very good news for us, but perhaps not the best news for them. We still got a lot of follow-up. So for West Haven's perspective, we still might discover something in there, but certainly all our primary projects that are going to drill phase this year sit outside of that royalty area.
Well, you've given me some incentive to try to feather out of my West Haven and rotate across the boundary.
Yeah, sure. You know, people invest in West Haven probably for quite different reasons than they'd invest in us. You know, West Haven's 3 years on at shovel nose, and they've still just got 2 rigs, and we're a year into Bralorne, and we're going to 8 rigs. So I guess it's just different ways that the companies like to be managed. We want to get to resource as quickly as possible. For some reason, that's not West Haven's pathway. We like to be well capitalised and aggressive. West Haven prefer to raise little amounts. So it's just, I guess, different styles with corporate management. But you know, if I certainly can't advise you to sell West Haven stock, but I can sure advise you to come and buy ours, because I think we're certainly building something incredible here, not just in Bralorne, but also the great potential that we see in the Greenfields project.
Very well handled, Terry.
All right, thanks a lot, guys.
Thanks, David. We'll turn to James Qantas, please.
Actually,
yes.
James said he was having issues with his mic, and so he chatted in. I will read his question for him.
Great.
Thanks for the presentation. Nice context and comparables. Questions. Number 1, are permits in hand for Golden Hornet, and what is the status of permits for Dora, Cyclone, Nova?
Right, so I'll answer that first question there, and then you can ask the other 2 parts. So we've just recently discovered that the previous landholder of the Golden Hornet, one of the Golden Hornet areas where we want to drill, actually had an active drill permit. So what we're doing is that we've contacted them, and we're going to transfer that drill permit onto us and then just amend it. So we hope to get that permit within the next couple of weeks. And our plan is, at least now, is to start drilling at Golden Hornet in the first couple of weeks of February. So I haven't seen anything either from our First Nation partners or from the government that would change that view. Obviously, things are ground down a bit with COVID on government, but you know, I'm still quite confident we should have it by there and have those rigs turning. The only slight delay we might have at Golden Hornet is not related to permitting, it's related to our geophysics. So at Golden Hornet, just to refresh everybody, we've got some massive sulfide veins and a lot of disseminated sulfide in the halos around those veins. So we've made the decision to do both magnetics because there's a lot of pyrrhotite, one of the magnetic minerals, and also VTEM or electromagnetics, airborne electromagnetics, because there's a lot of sulfide material both disseminated and in the veins. We kicked this off in November last year, the geophysics. Unfortunately, the weather came in bad, so they had to suspend that, and we've actually just started that this week, flying that area. Because our geochemistry's come back very good, and we expect that the potential field results will be very good, I'd probably prefer to wait till we have that, and that would really increase our targeting accuracy, being able to combine the mag, the VTEM, and the geochemistry for targeting.
Thank you. Scott?
Thank you. Yeah, and there's another question also. Any decisions on the TDG Gold shares potential spin out?
Well, to be honest, they're actually doing quite well. They ran up to 42 cents. Our first block comes out of escrow in April. I guess the answer to that, James, really depends on market conditions. And that'll depend on whether we do a divestment of that to our shareholders, or whether we just on-sell it and use the capital for our exploration. At the moment, I'm leaning towards using the capital, but I guess we'll make a decision close to that, depending on what their share price does throughout that time.
Thanks for your questions, James. We're going to turn to Rick Winters. Rick, question today for Terry.
Are we unmuted?
We can hear you, Rick.
Very good. Thanks, Terry. Two questions for you. Certainly a robust system. What I'm curious with the work that you've done, both in terms of the modeling as well as the drilling, I'd be interested in your comments on how you translate the historic information you have on the veins into useful information for a resource assessment based on drill sampling and spacing. That'd be one question. The second question, which is related, is how would you intend on looking at the lower grade halo around the veins per se? Would you look at that as something that would be in the resource, or would you look at that as something to be looked at as a waste model per se, so you had a good idea of how that material impact the higher grade vein per se?
Right, yeah, awesome questions. The first one on the historic assay data, the reality is we can't use it for more than a guide. You know, it's all pre-43-101 data. The majority of it was assayed at the mine lab, so it's not independent assay data. So we can't per se use it in as to classify as a category. So we can use it as a guide, and that's why we use the term potential, because it gives us a very accurate control on the potential of the deposit, but we can't translate that into resource. We are able to use that as a weighted guide to our geostatistics, but we can't actually use it as a calculation. We've got to go and put the drill holes back in. One of the benefits it gives us, of course, is it defines well the historic continuity. So it means that our down dip variography is very strong. You know, our drill spacing there, we can look at 75 meters by 50 meters for inferred drill spacing. So it helps us in that way. The main thing that helps us with is we know where all the veins are. So we can target these, you know, and we target and intercept these within a meter of where we anticipate them. It also gives us confidence as well, you know, when we have, you know, all veins have nugget effect. We're drilling a very small intercept with the drill hole. So when we hit some grade that's not flashy, we don't have to be concerned because we know there's a series of assays surrounding that have more likely closer to what the average grade is in that population. So I think they're the things. It gives us a lot of confidence in the location, the grade and the width of the veins, but no, we can't use it there for resource calculation. To answer the second part of your question there on the bulk tonnage, so we're not really at a stage where we can make a decision on the economic viability of the bulk tonnage. We're resampling 15,000 meters of historic core. We're sampling the vein halos and the new veins that we're identifying, the vein zones. You would have seen some of those at market, the Charlotte, the Empire, the Knight, the 51 that come to surface. So we're still in the process of building a robust enough database so we can really evaluate, is that a real option? Or do we just stay focused on the high grade narrow veins? So our plan is to have a decision on that by spring, by end of April, May this year. So we're going through the process of cutting that historic core, sending it to the lab, getting it analysed, building it into a model, and seeing, well, what does the distribution of these lower grade areas look like? Is it something that can be economic? But we're not at the stage yet, and I certainly can't commit to, yes, we're going to have bulk tonnage all over the place. So ask me in 3 or 4 months and I'll be able to give you a good answer. We have to do the right work.
Thanks.
Very well answered on that one. We're going to just turn to Bruce Daigle and then we'll proceed to close. Bruce, question today for Terry?
No questions that have not been answered. It's a great presentation. Thank you so much, Terry.
Yeah, thank you, Bruce. Yeah, you really covered the bases today, Terry. I'm going to turn this back to you for closing remarks, please.
Great. All right. Thanks very much, everyone. I guess for some listeners, what we present as Talisker is a bit out of the ordinary for a company to have multiple projects that it's going ahead at drill phase, to have a flagship where we've got very well constrained potential, very well constrained location of the veins, and a very clear pathway to resource base in a very short time frame. And that's really what the takeaways are from being executed by a team who's done this before time and time again. Really, that's the summary of Talisker. Thanks very much, everyone.
Thank you, Terry, very much for presenting. I appreciate everybody's attendance today. In due time, we'll follow up with everyone for your feedback, and of course, please send in your questions, any that have not been answered, and we'll circle back with Terry and get right back to you. In the meantime, I want to wish everyone a pleasant evening, and again, thank you for being on the call. Bye-bye.